Wow, oil makes the news again. Supply, demand, who's winning? As I've said before, I'll say it again. Demand moves oil. Oil has been around for a long time and our lives revolve around it. Transportation, heating, petroleum-based product. The pandemic has changed many things. Are we at a level of demand? Or are we still at a level of oversupply? Stay tuned to see what you should consider doing. Now, you'll hear me say this over and over and over again. What moves oil? Demand. Where are we? Are we at demand? Are we at oversupply? Well, here's a stock that's moving within the oil industry, Halliburton. Halliburton shares march higher. Can it continue? Well, I like this story because the question that asks, can it continue, will be revolving around, are we at supply or are we at demand? So there's a couple of other stories that I have in here, but this one shows, as of late, it has definitely been a great time to be an investor in Halliburton Company. So that's an oil stock. The stock has moved higher by 12.9% in the past month, while it's also above its 20-day moving average, the simple moving average. This combination of strong price and performance and a favorable technical could suggest that the stock may be on the right path. Well, this is one story about it. We're going to use the power of the VectorVest software to help us determine if that's correct. Now, another one. Oil ends up after staggering crude draw that raises question. Crude draw, well, so does that mean that we were pulling stocks out of our supply? Oil prices rose on Wednesday after the data showed a staggering unexpected drawdown in weekly U.S. stockpiles. So we're pulling our supply and slowly but surely starting to deplete our supply. Once that happens, it will create demand. Now, I've read a couple of stories where the oil-producing countries that tried to stem off the fall in oil said, we're going to cut back on production. And if we do that, that should bring up more for demand. Guess what? It didn't work. It didn't work. And they turned around and said, forget this. We're going to open up production again. We need to make some money. Even though the oil is lower than we want it to be, we need to make some money. So the oil producing countries did come back and start oil producing again. So West Texas Intermediate, WTI, is a stock that I look at a lot because it is the benchmark for U.S. crude futures. It settled up 23 cents. Crude inventories declined 10.6 million barrels during the week ending July 24th. We dipped into our supply. And the more and the faster we get through our supply, demand will pop off. It'll happen. It will happen. So this is what I'm looking for in regards to oil moving. Now, here's one more story. Saudi Arabia books a $29 billion deficit in quarter two. Remember I told you they turned around and they said, we're going to cut our production? It hurt them. Saudi Arabia booked a deficit of $29 billion for the second quarter of the year because of the continued slump in oil prices and what? Oil demand. For everybody who's been browbeating me about oil and saying, well, you missed the train. Where's my train? Do I have a train? For any of you who said you missed the train on oil, I'm telling you that when the oil hit and it started moving up, it's because the oil contracts were so low. The people who jumped on board said, holy smokes, oil will never be this low again. Let me get in. Since they've gotten in, what has happened? Oil has been stagnant because the demand is not there. So Saudi Arabia booked a deficit because the demand is not there. Demand is what's going to move oil, folks. And this is coming from Saudi Arabia, who's one of the biggest oil producers. Well, we're probably bigger now, but a big oil producing country. Keep that in mind. Oil revenues from April to June were down 45% on the year, with a total budget revenues down 49% of the year. So what does that mean? Well, even the oil producing countries are feeling the effect of the low demand. So let's take a look. Let's get back into the software. Let's take a look. Let's go. Whoops, that's not what I wanted. I wanted, where did I want? How did I get to? No, that's not what I wanted. That's not what I wanted either. Joey, how do I get to what I want? Is this what I want? Yep, that's what I want. Let's go back to my graphs. Sorry, let's go back to my watch list. Is that it? Yep, there's my watch list. Let's go look at the oil stocks. One, what else I'm going to look at? I'm going to look at Halliburton. That was the story. What else is in my oil list today? WTI. All right. Those are the two that I primarily look at. Well, Halliburton made the story, but WTI is what I use to determine whether it's okay or not okay to be in oil. Next thing I want you to look at oil. That tracks the oil futures. It's got a sell recommendation, where Halliburton, on the other hand, as the story shows, making money, it's got a hold recommendation. Let's analyze it. The Halliburton stock is trading at $14.70 with a value of $7.90. The stock is clearly overvalued. W&T Offshore, trading at $225 with a value of $189. That's probably closer to being fairly valued. All right. Upside potential, relative value, not there. So even though Halliburton is going up, do I want to hold Halliburton long term? The answer to that is no. W&T Offshore, am I ready to hold it long term? Not yet. RV at 0.75. Relative safety, that indicator of risk. Again, below the value of 1. Halliburton is 0.76. This is not a safe stock. WTI Offshore, 0.63 on relative safety. Not a safe stock. But now, Halliburton making money, what's that mean? People are liking to get into it. Relative timing at 1.29. Halliburton's in an uptrend. Whereas I look at W&T Offshore, look at that, 0.37 in a downtrend. So Halliburton looks to be a leader in the industry, whereas the industry is still going down on the contracts for oil. Let's right-click on these. Let's look at their graphs. Let's view their stock graphs. So Halliburton has made some money. All right, look at that nice run coming off of the low. And this is where the contracts, right up in here, that March-April time period, this is where the oil contracts were in the gutter. And people said, woo-wee. What did they say? Woo-wee. They jumped on board with that stock. It ran. A do run, a do one run. You can't sing, Joey. Don't sing. I'm singing. You can't. All right. And now the stock, what is it doing? It's moving sideways. I do like that the 3 and the 8 crossed up. Right now, a little bit of sideways move for about 1, 2, 3, 4, 5 days. The 3 is still above the 8. Watch volume. Volume is pulling back a little bit. RT is still above 1. So altogether, the story about Halliburton making money, is it still good? I would really like to see the stock get out of its own way before I pull the trigger to buy it higher now. But the industry, look at the WTI Offshore. Holy smokes. I got new sounds, folks. Holy smokes. Oh, I got some good signs. Thank you, Joey, for giving me my new sounds today. How about it's traveling to a level of support sitting at $2.18. Currently, right now, it's trading at $2.26, but look at that bounce. It hit the zone today, bounced off of that level, a nice wick at the bottom, a bullish wick. I would really like to see WTI start to have the 3 go above the 8. RT is below 1. I'd like to see a combination before I'm ready to really go in all on oil. One, the demand is going to have to start picking up, but I'd like to see the 3 go above the 8, RT go above 1. Bingo, that's going to be your opportunity to pull the trigger, and you're going to be able to catch it low and ride it high. So I'm still saying right now, I'm not ready to pull the trigger. But I'm giving you some insight of what to look for to know when it's okay. Wait for that 3 to go above the 8, RT to go above 1. You're going to get a great opportunity to buy low and sell high.
Yeah.